Good morning everybody, and this is your S&P 500 setups for today. So yesterday played out perfectly. You can see the zone that we were talking about for a short, and that was around 51.73, 51.66 area, and that's exactly where we went. Obviously we skipped the levels below, but we'll look at the price action now, but that's what we're looking for. Target area was always 50-50, and that's exactly what we targeted. So for today, don't think I'd be wanting to be jumping short over here. We obviously want to see a pullback onto structure. Now, there are multiple areas where that would make sense, and they are 51.11, 5100, and 50.83. So I think 5100 is probably the line in the sand for me. That's the one that we need to look for. Sorry, before we go there, one thing to bear in mind, we do have this channel here, but it is going parabolic at the moment. So you can see measured move down, and then starting to get a lot steeper. So this could be exhaustion or a start of something bigger, but typically when you break a bull flag like this to the opposite direction, there's only a 25% probability of it going forward. In other words, continuing. So there's a 75% probability of coming back into the channel and breaking out. So just keep that in the back of your mind. I'm going to delete that for now. It's not important in my eyes. What we're looking for is structure. There's nothing further here to say. 50-50 is the area you need to pay attention to, and then 50-83, 5100, and 5111. Those are the areas we do need to pay attention to. So the trend is down at the moment. There's no two ways about that. Oscillators are extremely oversold, and you can see how they separated yesterday, gradually ground its way through each one of these tails that we had. See, there was a fairly decent level around 51.50, which is on the bigger time frames what was always targeted, but then you can see we were ambushed on these two higher levels, and it was a daily swing low at 51.66, and then 51.73 or 51.74, which is the top of this range bar. So when you look at this on the 15-minute, obviously you would have had all your levels in. So you would have had this level, you would have had this pin bar in, which is 51.52, but you know something is going to happen here. And if you just look at 51.52, which is the logical area because it's a round number, you can see pin bar, and then you've got kind of an engulfing bar, but there's buyers coming in. It's not really closing below that pin bar, and also it's pre-market. Then when we get later in the morning, you can see during the market that we get this exhaustion bar up, and now's where you start looking because the market is open. So this area here, the market's not really open, so ignore it. You did have a gap up here, as we mentioned yesterday as well. Gap is closed, and then you have a fairly decent double hanging man off the top here with an inside bar, and then you've got this massive follow through bar. With the oscillators group to the upside, everything indicating that you're looking for a short for a continuation, and there it was. If you weren't comfortable with that entry, you would have found the second entry roughly over here. So you can see there is support that was formed during the day at 51.45, inside bar, massive follow through bar. Your entry could have been there, so it's a 238 point stop, a bit more risky than the top move, but still would have played out a good 700 points. So anyway, that's kind of the view. For today, what you're looking for is 50.83, you're looking for 5100, and then you'd be looking for 51.11. So what you're looking for is price to come back. You're looking for a pin bar, inside bar, engulfing bar, shooting stars, or hanging men at the moment would also play a role, but you're definitely looking for another leg lower. The big question is, where are you going to because we are at major area of support here. So breaking through this 50 area is going to trigger a fairly strong move to the downside. And you can see the daily levels here. This is the key one here at 51.11. So I think 51.100 is, or 5100 is what you need to pay attention to today. If we do get a rejection there, I would expect another leg down. Bear in mind, earnings season, so anything can happen. We've still got everybody trying to figure out what to do with Iran, so that could also impact the market. So you just need to be very cautious. I think it's going to be volatile, and you're looking for opportunities at the moment. Too short, I know on the daily it is a strong uptrend, but we don't have a daily signal yet that is saying this little slide to the downside is over. So what you want to be doing on the hour is looking for the opportunity to continue the move to the downside. And you can see 51.11 was Friday's low. That's what you want to be targeting for a rejection. And your first take profit is going to be at 50-50. A good 50 points on the index, but it's 500 points from a trading perspective, or 500 pips from a trading perspective. Okay, anyway, that's kind of my view for today. Looking for the shorts, looking for the pullback, the rejection higher, and then the continuation. A break above the high of yesterday nullifies any move to the downside. Hope that helps, and we'll catch up with you tomorrow. Cheers for now.